Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Anne Dobrée of Parkwalk Advisors to talk about Parkwalk's range of EIS funds. Hello Anne, welcome to the studio. So we're here to talk about the range of EIS funds. Firstly, what are they? What makes them different, and why should investors consider them?
Thank you, Jonathan. Thank you for having me. Parkwalk has a range of funds that are focused on UK university spinouts. So what's different about them is that they're investing in this very interesting and fruitful area of deep technology. We've been running these funds for now 15 years, since 2009. We've got 500 million of assets under management across 120 companies, and we've returned 150 million to investors so far. And
it's the range of funds are, you've got your core EIS Opportunities Fund, and then you have a couple of dedicated individual university funds as well.
Yes, let me tell you more about those. So we have, our main fund is an Opportunities Fund, so that invests across the whole range of the UK. Obviously focused on university companies, which for those who don't know what they are, these are spin-out startups coming out of universities around deep intellectual property that's normally being protected, mentored, worked up by the university itself, but quite a hard asset class to get into if you don't have the connections. And so the Ops Fund invests in a portfolio of 8 investments for each investor. It's open all the time. And we try and give investors a spread of risk between the stage of a company from very early up to Series C, and also from sector that the technology's in. Then we also have a knowledge intensive fund that we launch once a year. The next one's about to open, and obviously will close at the end of the tax year. And that invests in 10 to 14 companies, all of which are knowledge intensive, of course, and all of which we can find alongside our Ops Fund, because all of our companies are knowledge intensive, so that's nice and easy. And with a knowledge intensive fund, you can claim the tax breaks back when the whole fund is invested, rather than on each individual investment, when the fund closes, you know. And then in addition to those, we have some very early stage, very pre-seed funds that we run alongside Cambridge, Oxford and Imperial. And they help those people who want to get in really early to these deep tech companies, but also act as feeder funds for the main retail funds.
And so taking a step back, all these funds are managed by Parkwalk Advisors. Yeah. So for those who don't know, who are Parkwalk Advisors?
So Parkwalk, was set up in 2009, and most of the team are the original team members who've been there since then. So 15 years experience focused on university sector. I myself joined more recently, but I had actually worked with Parkwalk since 2012 because my previous role was Head of Ventures at the University of Cambridge, so supporting Cambridge spinouts. And together with Parkwalk, I set up the first university SEIS EIS fund.
Very good. And so what types of companies does Parkwalk like to back?
Obviously, as I keep saying, university deep tech companies from all parts of the UK. So all the way, we like to say, all the way from Aberdeen down to Southampton and Cardiff across to Cambridge, and from very early seed stage all the way through to Series C. And we've invested in companies from quantum, life sciences, materials science, chips and communications, therapeutics, medtech, digital health, AI, all the deep tech sectors.
And so can you give us some examples of companies you've backed recently within Parkwalk?
Yes, I have some exciting examples. First on my list is Accelercomm, which is developing hardware for communications networks. So the exciting thing about this is that one of the areas for deployment is space, and it can ensure that 5G can go direct to your handset without using any terrestrial infrastructure. But on the terrestrial side, you can also use it to boost how your 5G network works, and either halving the power consumption or saving on capital costs because it makes it so much more efficient. And we recently invested in that alongside Swisscom and Host Plus. And the second example is a Cambridge company on the therapeutics side called Phoremost. They just completed a $50 million B round. And they're working in the PROTAC space, which is a very hot scientific space around protein degradation to treat diseases, especially oncology. So this has got, world-leading science, a great management team, and will make a real difference to people's lives. And then my third example is in the clean tech recycling space, which is a much younger company. It's only just done a seed round. It's called Evoralis, and it has enzymes to digest textiles, plastic fibers like nylon, which really can then help to ensure that the plastic base material can be recycled much more effectively.
Yeah, that's interesting. And so clearly you've got deep ties with universities. Once you've found some of these investments or the universities have referred them on to you, how do you win these deals? Is it a case that you have relationships and you're a favoured partner, or do you have to really work hard for some of these?
Yeah, mostly we're in a very envious position because we're the most active investor in UK university spinouts. So they mostly come to us, and we've got 15 years of building relationships with university and their tech transfer offices. And then also our network, I think, appreciates that we tend to work hard alongside our companies. So we look to add value. It's not just about providing the capital. It's about having that knowledge of deep tech, early stage companies, how to work with academic founders, and how to work with the universities themselves. So we like to think we're a nice person to work with too.
Good. And so turning to the existing portfolio, you said you've backed over 100 companies. Are there any, looking at some of the more established names, any particular highlights there that people might be aware of?
My favourite at the moment is Cytora, which is another Cambridge company. I'm afraid I'm picking all the Cambridge ones, but there are equally stellar companies from other universities available. But Cytora is great because it's an AI platform for insurers. So it digitizes the workflows and enables them to increase premiums, increase profits, have a much better service. And it's just, at the moment, doing really well in the market. It's got a relationship with Europe's largest investor, Allianz. And they've also got major deals with Chubb in the US and a whole host of other insurance providers.
And so turning to exits, the past few years have been pretty challenging for venture capital. And we've seen exits fairly muted in the past couple of years. Has that affected Parkwalk at all? What's the environment looking like for you?
Yeah, I think we have found that it has been a bit slower, but we still had a great exit earlier this year from a company called Versed AI, which is in the, it's AI for mapping supply chains. So really useful for large corporations who have multi-tier supply chains and don't understand what's in there at all. They were bought by Exiger and returned a very nice uplift to our investors. And then also last year, we were one of the few EIS funds to actually have any exits. And we had the very nice exit of PetMedix, which returned 24 million to investors. So that's either 1.5 to kind of 8 times return on your money, taking into account, tax breaks and the escrow that will pay out, hopefully. So PetMedix is doing biologics for companion animals, so treating diseases in cats and dogs. And unsurprisingly, because there's a huge market in the US, it was bought by a US company called Zoetis.
Ah, interesting. But obviously, for every success, there are obviously failures, and turning to risks. How risky is your part of the market? So university spinouts specifically compared with other EIS funds. How high risk would you say it is?
Well, I think all EIS obviously is risky. But we like to think we minimise the risk in a couple of ways. Firstly, by diversifying the investor's portfolio across technologies and stages. But also you have to remember that university companies themselves come with a level of de-risking when we get them, because the universities have spent years incubating this technology. They've ensured that it's got strong patent protection in place. They've built the first management team. And often if it's come through our feeder fund, we've known about this company and tracked it over several years. So there's a lot of due diligence that has happened before we invest. So whilst, obviously every EIS fund will have some failures, we hope that the successes will more than make up for them.
Good. So to sum up, Anne, for those that want to invest in an EIS fund this year, why should they invest in one of the Parkwalk EIS funds?
Well, I think there's 3 great reasons. Firstly, our experience in the sector and the fact that we're not only the most active investor, but also have been working at it for so long. Secondly, unique deal flow. I mean, these are companies that are using, the world's brightest minds and the UK's great science space as the start of their commercial journey. And it's really hard for individuals to get into those investments. And then thirdly is our performance. We've got a very strong track record. We've returned 150 million to our investors, and we've got more exits in the pipeline.
Very good. Anne Dobrée of Parkwalk Advisors, thank you very much.
Thank you.
If you are watching on YouTube, please press like and subscribe to the channel for more.